Hello everybody, welcome to your Monday edition of TraderMerlin. Hope you had a great day out there. Of course, if you're long, you certainly did. Even in light of some bad economic, not bad, but not the best economic data, you had a, let's just say a rip-roaring market out there today. For those of you who might be brand new and joining us, I would encourage you to click that subscribe button on the bottom of the screen. We do the show every day live, Monday through Friday, with great traders from around the world. So hopefully you guys will join us more frequently, because I know we have a lot of new people joining us today. Also, our guest for today will be Corey Lane. We're going to talk to Corey Lane of Traders Army. We'll be talking about the three kind of most important things you need to know about trading options. For those of you who have not met Corey, he's been trading options for a long time, and it's his profession. He's a professional, he's a professional options trader and musician. He does quite a few things, so we'll talk more with him in just a minute. Let me walk through our top few markets here. I used to say 7, but it's no longer the top 7 markets out there. And hello to all our YouTube followers. Yes, hello all of you. Hope you have a fantastic day. Let's have some fun. All right, let's go to our charts here and show you real quick what happened. I'll try to go through this rather quickly so we can get more time with Corey. At the bottom of the list today, you're looking at gold. It's green across the board pretty much, but we've left these levels here on gold. You see that yellow line or yellow box? It's been stuck in the middle of the range. It was up 0.64% to 1764. But it's just sideways, nothing really noteworthy. You are coming into a slight overhead supply area, but I wouldn't worry too much about gold. S&P 500, 1.65% to the upside. Following 3 days of negativity, it was nice to see a little bit of a pop here. Big green candle, you call that a bullish engulfing formation, of 1.65% to 3110. All right, NASDAQ, helped by Netflix, which was a short candidate on Fridays, you guys may have remembered, but we did not take that trade because it never met our criteria of breaking back down into below demand. So NASDAQ was up 2%, 10,121, and as you notice, it's an all-time intraday closing high, or all-time closing high period. The all-time high was 10,141. Today, we hit a high of 10,134, so almost a brand new all-time high, but it's the highest close NASDAQ has ever seen. Crude oil, 1.88% to the upside. This is the breaking point for it, guys. It's right at that $40.58 mark, which has been a line in the sand for better part of 2 weeks. 1.88% move up to 40.58 on crude oil. If we break above this, guys, that gap is going to close very, very quickly. Russell 2000 was your best from the equity index perspective, although technically it's not that great, right? It is a slight bullish engulfing formation, but S&P's looks much better. All in all, you had a 2.16% gain in the Russell 2000 to 1,432, rounding out your indexes. Now, as they said in the Highlander, there can be only one. That would mean that the Bitcoin chart is your next victim here. Not victim, but celebratory, I guess. I still have a lot of Bitcoin. 3.92% move to the upside. It is creeping ever so close to that 10,000 mark, which we hit last week or 2 weeks ago, and seems to be challenging it repeatedly. I think you'll end up breaking it here. 3.92% to 9,680. All right. That's all said and done. Now we got the bad stuff out of the way, got the housekeeping out of the way, if you will. Well, we're going to switch things up here a little bit. As you guys may know, we've had Corey Lane is going to be our guest today. And the topic today, as you can see on your screen here, is the 3 most important things to know about trading options. Of course, there's a lot of things that you should all know about trading options, but that's probably the most important. There's 3 basic things. What is it? And welcome, Corey Lane. How you doing?
What is up? Good to see you again, my man. How you doing?
Good to see you. I always love the broadcasting studio. I've told the audience I'm going to try to encourage you to do the next show from the drum set. So every time you say something dramatic, you can hit the cymbals. Yeah, you know.
Or something funny to do.
Yeah, the shave and the haircut theme. Good to see you, my friend. How you been?
Good, man. How about you? I can't complain.
I'm pretty good. I don't think I could be much better. I've got my health, my happiness, and my dog over here, which, by the way, if you guys hear a really strange sound in the background, my dog is literally having nightmares. I'll even point it out to you. He's right there having nightmares right now. So if you hear some weird grunting, guys, I swear, it's not me, it's my dog. All right, Corey, let's get into things. Of course, you guys might know Corey from TradersArmy.com. We'll talk more about that as you have an event coming up this week as well. Let's dive right into it, because I know we have some people who are brand new to the show and probably thinking, Merlin, just get on with the show already. Let's talk about the 3 most important things in options trading from your perspective, because you've been doing this a while. Where would we start?
My goodness. We always have to start with the stock itself. Now, this assuming you're primarily trading options on stocks themselves, because You can trade options on futures. You can trade options on stocks. And so no matter what you're trading options on, one of the biggest things that I always get from members and just students and people who are constantly in contact with me about options is, I want to set up an option screener. I want to set up, how do I screen for different option strategies, like the best stocks for iron condors? How do I screen for the best stocks for bull call spreads, or just the best stocks to buy puts on? And in my opinion, that's the wrong way to look at it, right? Because every option trade, and you can write this down too, I suggest you doing it, not you, Merlin, you've heard it a million times, but everybody else listening, is every good option trade starts with a good stock trade. So we always start with the underlying, build out an outlook. If you don't have a good trade there, then you're not going to have a great trade in the options market. And I think what people consistently think about options is, options are going to fix my problem if I suck at trading stock. I should probably just go to options and maybe that'll fix my problem. But that's not going to happen. You're just going to get more leverage, and whatever you sucked at in stock, you're just going to leverage that in options. So first, start with a good stock trade, build a good stock trade, then choose the right option strategy that's appropriate for the outlook that you've built on the underlying. That's number one.
All right. So I actually had a student a while back. And you know how long it's been. It's been a long time since I've actually taught physical classes. But you mentioned the underlier, and to me it's critical. And I love your comment about, if you can't trade stocks, properly, then good luck trading options. It's not going to help you. You have to do them both properly. And this guy came into a stock class I was teaching a long time ago, and he says, I was forced to be in this class. I don't want to be here. I just want to take options. And I said, well, don't you need to know the underlier to trade options? He goes, no, absolutely not. I just need to know options. So what would be your response to someone like that? Because I agree with you. I think that if you don't understand how the foundation is built, how do you know how long your house is going to stand up? I mean, you got to know the basics.
Yeah, I think this is probably somebody who is new to options, probably doesn't know much about. I mean, options themselves are a separate asset class from the stock, but they are derivatives in the fact that they derive their value from the stock. So if you don't understand how the stock is expected to move, then I can't fathom how you would understand how the option is going to trade. Now, the only thing that I could think of, that if somebody says, I don't need charts, I don't need to know the stock, I just want to focus on options, they may be trying something really dangerous, which is, and it's safe for a while, Merlin, but it gets dangerous after a little while, is I've seen folks who just focus on selling really deep out of the money option spreads, or really far out of the money options. And 9 times out of 10, that'll probably work, even if you're not looking at a stock chart. But the one time it doesn't work, I've seen it wipe out 6-7 months worth of profits by not focusing on what the underlying can and is probably going to do. And so if you want high probability option trades, you start with high probability stock trades, right, first and foremost.
And I think to piggyback on that, when you talk about, you're saying there's people saying, is there an option screener or something that I can run to find out, do I use the Condor now or different spreads? I think it's actually much simpler than that, because you wouldn't necessarily be needing to run the filter on the option strategy. You're just saying, let me look at a price chart, and hey, you know what? Netflix yesterday on Friday was a good example. We came into an overhead area of supply, and I'll bring that chart up for the viewers out at home, just because it was something that I looked at. Let me bring up NFLX for you guys at home. It was something that I looked at, and I thought, you know what? I'll look at this one. It might be interesting. On Fridays, it came into overhead supply, all-time highs, right in between 451 and 458. At that point, you don't necessarily need to say, what strategy do I use? You're looking at it saying, all right, price is coming into supply. I now need to figure out which strategy I use when in supply and what I want to achieve out of this trade. So it's no longer, let me run a scan for iron condor trade, saying, let me find the fundamental setup here. And by the way, this is the chart that it did not go through. It didn't meet the criteria, so I was going to buy some puts on this as part of my option strategy. Didn't happen today, didn't meet my criteria, so I just bailed on it, and luckily, because it keeps on rallying up. But would you agree that's kind of like the basics, is you're going to run through list of your normal players in the market and trade that way?
That's exactly it. Some of us use the same stocks on a regular basis because we know them so well, and we know how they breathe, we know how they move. You could just use different option strategies for the different outlooks you may have on the same basket of stocks you always trade. Right. I have about 250 stocks that I filter through every week manually. I don't screen for them. I just literally with my own eyes, 250 of them, I get through it in about 10 to 15 minutes. And then I'll usually narrow my list of 250 down to about 5 or 6 maybe bullish positions, 5 or 6 different bearish looking positions. And from there, we'll dive in and we'll start looking at potential option trades. But it's got to start with the stock.
Yeah, and I'm actually kind of recreating right now what Corey's talking about, guys. I do this exact same thing. This is a list of securities that I have, and I'm just flipping through here looking for different chart formations that I like. And I'll actually bring up one just as a nice little one. I think it was International Paper. You've got this hammer formation into a demand zone. Okay, it doesn't mean I'm making this trade right now. It means I'm now drawn my attention to it, and I would be probably looking to buy some calls on a break above the high of today. But it may be different for you. Maybe you don't want to be a buyer. You want to be more of a seller of it. So great. But it's about finding those basic things to start with and then moving on from there. All right. That was number one, was looking at the underlier. Probably one of the most important pieces is what is that options trade built on top of? Obviously, that's the underlier, whether it's stocks or futures, doesn't matter. Still got to know the basics. What was number two?
Number two is, and you kind of started to touch on it a little bit, which is if you were going to look to enter International Paper, you might just look to buy a call on it. And that's one thing that you could do that would profit or likely profit if the price of IP went up. Now, there are some secondary factors we want to look at, which is not only is the stock expensive or inexpensive, that's relative to supply or demand, but are my options expensive or inexpensive, which would tell me whether or not I'd want to be a buyer or seller or spread trader of the stock. So for that, we have to look at something, and do not ignore this. It's implied volatility. And I know that so many people have heard of implied volatility, but rarely do I find that people actually know what it is, where it comes from, and why they should freaking care. And in a short summary, it's, are my options expensive or inexpensive relative to where they've been in the past? And we would always want to do contrast and compare when buying things, when buying clothes, when buying cars and homes and other stocks. We contrast and compare, our prices high or low. But when you dig into the options, rarely do people do that. They just simply think, oh, I'm just going to buy a call because I think prices are going to go up. And they might be right. But if you buy an overpriced call option and the price of the stock goes up, what may happen to that call option, and what typically will happen, is it'll get cheaper even as the price of the stock goes up because it was already overpriced to begin with. It's buying an inflated contract. Right. And the right trade isn't always the one that you favor because you know that one the best. Like some people that I know are like, oh, I love credit spreads. I want to write credit spreads all the time. Great. That's a one-trick pony. That's all you'll ever do. And you're not going to maximize your profit potential, and you're certainly not going to minimize your risk or maximize your risk there by just focusing on one thing. Options have too many strategies ultimately, but so many to choose from. Why just focus on one when you could maximize and optimize based on implied volatility relative to where the stock is trading?
Yeah, I don't have IV on this, but have you looked at Nikola, the stock Nikola yet?
I haven't.
Look up. I wish I could bring up. I don't have implied volatility on my screen, but bring up NKLA. I'm curious to see if this is one of those almost laugh out loud situations for implied volatility options. This has been an interesting one lately. It's we did a special on it talking about how it might be a not necessarily a pump and dump, but it's one that has been completely overinflated by the marketplace. And unfortunately, I don't have the chart up, but that's one that people are talking a lot about, the implied volatility just ripping on NKLA.
Yeah, implied volatility ripped from basically just before the big market, dump earlier this year, was already at 104%. Then it rallied to 500%. Merlin, that's huge. And now it's back down to 230%. So this is one where the options are grossly overpriced, not just relative to where they've been trading, but relative to most other options. This almost... What is this? Because this seems like a biotech. Almost.
No, they're saying this is going to be the new Tesla. It's the Nikola truck. Sure. It's the hydrogen fuel cell truck. But I brought it up because it's one of those ones where I wish I could show the viewers. But when you look at that high implied volatility, like 500%, you're thinking, wow, this company is going to go down. I'm going to short it. But so you run out there and you buy the puts, and you may be 100% right. This stock could go from $70 down to $40, and you're still going to lose money because you paid so much for the options.
Yeah, or not make as much as you should have, and so you're kind of shooting yourself in the foot there. It's like, why would you go through all the work of building an option trade if you're not going to maximize it by using the right strategy?
Yeah.
This would be the case for, the options are overpriced. Does that mean I don't want to buy them? No, I still want to buy one, but I'm going to pay more money than I should for it. But to compensate for that, we're going to sell another option against it on the same stock, which then equalizes or neutralizes what you've overpaid for that option in the first place by selling someone else an overpriced option
right
at the same time you're buying one. That's spread trading, and that's 90% of your trading. That's 90% of where your trading really should be when you really study implied volatility.
Right. And I think that goes to your point you mentioned right at the beginning of this, which was for number 2, implied volatility, knowing whether you're paying too much for something or if something's very cheap. In this case, you're already at a huge handicap if you look at buying puts on NKLA because the premiums, it's so high, it's so inflated. So why not look to be a seller? And again, there you have to start to strategize about what zones, but that different conversation. All right, so we've got understanding the underlier being number 1. We've got understanding implied volatility, so you know kind of the risk that it's posing to you at any moment in time. What would be number 3?
Number 3, and I get this question a lot, is, okay, now I'm in this position, whether it's a long call, long put, whatever the put spread, call spread happens to be. Now, how do I know how much money I stand to make? Mm-hmm. How do I know how much money I stand to lose? It's figuring out risk reward, which all dials back to your option sensitivity to the stock price changing, time going by, and volatility changing. Folks, we're talking about the option Greeks. The option Greeks are something that you should not bypass learning and studying. You should become very intimate with how implied volatility works and how all the options Greeks play out, because here's where you're going to find quickly. And I just ran through a scenario with somebody not 2 days ago where they had an option position on. It was just a long call. Good for them. It's just a long call option. They expected stock to go up, and I did too. It looked like a great trade. Here's a problem. They bought an option that was 6 months away from expiration, which has really high volatility sensitivity, meaning if implied volatility changes by 1 point, they were going to make or lose $75, which doesn't sound all that bad. It sounds good if it works in your favor. It's bad if it works against you. But their delta position, which is how sensitive they are to the stock price actually moving, was a 45. So check this out. If the stock went up $1, they made $45 on a contract. But if volatility dropped the same 1 point, they would lose $75 on Vega. So they were losing money even though the stock price was going their direction, and they couldn't figure out why. Mm-hmm. And I'm like, how much do you know about the option Greeks? Well, I've heard of them, but I don't really know how to use them. And that's got to be number 3, because if you don't understand your option sensitivity to time, volatility, and directional movement of the underlying, you will find yourself in the exact same situation where you're overexposed to volatility moving against you and underexposed to the stock price moving for you. Does that make sense?
Yeah.
And so it's an easy one to tackle, but it's an important one to tackle as well. You got to understand the option Greeks. And those 3 specifically, delta, Vega, which is your volatility sensitivity, and theta, which is your time decay sensitivity. Those 3 things, those 3 factors are going to affect your overall net performance. If you don't understand them first and also know how to put them in your favor, which goes by the first important factor, which is look at the stock price and what you expect from it, look at volatility, what you expect from it, and then understand your Greeks. Those 3 things all put together, while I can't sit here and say you're guaranteed to be a successful option trader, when you know those things and you put those things in that order and you put those into your rule set, it's very difficult to net lose money overall when you're putting those things in your favor. Right. It just stacks more odds in your favor, which is this whole game anyway, is stacking odds in your favor.
Right, totally agree. With those 3, for those who might not know options, you can kind of look at it as most of us drive a vehicle of some sort, and you have a tachometer, which tells you your RPMs, you have a speedometer, which tells you how fast you're going, and you have a gas gauge, which tells you how much fuel is left in the tank or how long your car is going to run for. Those 3 things, a lot of us might take it for granted. Most of us probably pay more attention to how much is in our gas tank, which would probably delta, how much time you got left. But the other 2, they're all important and critical in helping that vehicle optimize performance. And I think your point is, from a risk management perspective, understanding those three becomes critical, because it's not that one of them is going to make the trade, but you might run in a situation where you look at a specific number on whatever Vega or Delta or Theta, whichever, that makes you go, you know what? There's a little too much risk here. Or you find that sweet spot, which is a question from Natalia. She says, what's a good number of Delta and Vega for that magical combo?
Natalia, the answer is yes.
Well done.
Right? There is no magical number, right? Because every strategy has a different amount of exposure that you want. For instance, we'll take your Nikola for a second. If you thought Nikola was going to go down and you wanted to enter into a bearish position, but you didn't want to short the stock outright and you wanted to look at options. We look at options right now, we see volatility is in the middle of the range from the last 1 year. Smack dab in the middle of the range at 225%, which is a high number, but it's in the middle of the range. So if volatility were to go down, it would hurt a positive Vega position. If volatility were to go up, it would benefit a positive Vega position. But since we're in the middle now, there's no way of knowing which way volatility is going to go, up or down, once we're in the position. Mm-hmm. So we have to neutralize that position and get rid of Vega as much as possible. So we want a very small Vega, but we still want to take a directional outlook, which is bearish. So we'll end up with buying a put option that's closer to at the money, selling a put option that's further out of the money for a net delta, minimum net delta of 25 or 0.25 if you're looking at an option chain. This way you can still be exposed to 25% of whatever the stock does, but the spread trade would then neutralize your Vega and neutralize your Theta. Therefore, doesn't really matter what happens to volatility at that point. You're just straight concerned about what's going on with the price of the stock. And I would build a trade like that if I didn't want exposure to Vega. Now, what about if Nikola was very bearish, but volatility were extremely low? Well, then I would want to expose myself to more volatility on the outlook that if prices fall and volatility goes up, we want to profit not only on price falling by buying the puts, but we want to profit on an expected rise in volatility by having that positive Vega scenario. And the more Vega, the better, if you can anticipate where volatility is going to go next, which is why we use volatility charts for that, right? So there's kind of a sweet spot, but it's for each strategy. Sweet spot for buying calls and puts, selling calls and puts, and then different types of spread trades. There's a different sort of magical sweet spot in each one of those. But it first comes together when you say, well, where do I expect stock price to go? And where do I expect volatility to go? Now let me either reduce or enhance my exposure to those three Greeks that are going to allow me to benefit the most from my outlook.
Nice. Guys, real quick, let me show you. There was a question that came through here. I always like to give people props for their name, but I can't remember who said it. Joseph says, where and exactly how do we measure implied volatility? I just pulled up, you can go to ivolatility.com, and I brought up the chart for Nikola here, and you can see there's a bunch of different readings for it. We won't get into all how you read it, but I think what's interesting is this part right in here. And you can look at for puts or calls, but a month ago, you're looking at an implied volatility of 194%, which is extremely, that's very high to begin with. But then you look at a week ago, a week ago, it was 432%. That's off the charts, nuts crazy. And just to put an example, let's bring up something like Intel, which I think we'd all agree Intel's not a big high flyer. It's not going to be the one that just goes nuts and rips your account apart. Let's look and see what it might be for Intel here. Of course, my system is now wanting to take forever to bring that up. I don't know why that did not bring it up. Let's go INTC. And there you go. So here's Intel. We'll take a peek at that bad boy. And you can see on that same chart of implied volatility that I had for Nikola, which is up to 400, you can see right now we're down in the 34 mark, 34%. Now that's more stable, right? So this is not going to be one that just blows you out of the water with massive, wild, crazy swings or overpriced options. This is probably, going to be more reasonably priced.
Right. Yeah. And so no matter what charting platform you use, you can pull up, you pulled up ivolatility.com, but most of the charting platforms that you're going to use as a trader are going to have it built in as an indicator, and you could just put that as a lower indicator like volume or stochastics or RSI or anything like that. Just look at implied volatility And again, to know how to read it and what to do with it, that's a longer conversation. But at least you can pull a chart on it.
Yeah, and that's what I was going to do, bring it up on TradeStation, but I've always had issues with their implied volatility chart, so I decided not to do that.
Yeah. But that's not you, Merlin. They have problems with their implied volatility chart.
Sure. Thank you for not blaming me. It's a good one. I appreciate that. Let's see. I had some other questions out there. Let me read through here real quick. Natalia also says, when you screen the 250 list, what time frame are you looking at? So, we always are taught, certainly that's what I teach as well, is to look at a multitude of time frames. Don't just focus on one. But I'm sure there's got to be one where it's kind of setting the stage for the trades that you make. What time frame would that be?
Yeah, great question. For me, that's dailies, because I'm consistently swing trading options versus day trading options. So you have to go with what is your intermediate or trading time frame. And for those who are day trading, your intermediate time frame may be a 15-minute or an hourly chart. But that's not where options really belong as a sweet spot, in my opinion. There's too many factors to think about, too many moving parts to really effectively day trade a lot of different options. And so swing trading, though, perfect. Long-term investing, great. So I usually stick with daily charts to identify my setup. So that's my trading time frame. And then if I need to refine a zone or a level to make it maybe a little lower risk, or to double check where I'm placing my stops and targets, I will go down to a 60-minute, but that's only to refine. I'm staying at my daily chart for all 250 stocks and going down one at a time.
Nice. All right, cool. And I'm kind of the same way. I just run through the list that I have. Mine right now is right around 350, maybe closer to 400. But I have it set for filters for specific things I'm looking for, whether that's shooting stars, hammer formations for candlesticks, or overbought, oversold situations and different indicators. And I will sort by that. So I'm immediately going to start at those ends and work my way through. But sometimes, this is the beauty of developing an eye for charting and looking at just thousands and thousands. You guys should just make it your daily routine. Create a list, whether it's 5 symbols or 500 symbols, doesn't matter, but start on a list and just start flipping through. And don't spend hours analyzing each one. You should be able to glance at a chart and within a couple of seconds go, ooh, that's got a good setup here or there. If it takes longer than that, you're spending too much time, right? And just start flipping through. Eventually you start to get this rapport with the markets, a rapport with your list, and also the ability to see things much faster. And sometimes I will find something that's not a pattern that I'm used to. It's not a candlestick formation, but there's a little subtle setup I look at and I go, ooh, you know what? I'm going to trade that one tomorrow. I'll keep my eye on that one. And it's normally wouldn't make my filter. And that's just the beauty of being able to watch a list and run through them on a regular basis. Yeah.
I call that process speed dating. You already know what you're looking for in the other person, and if they don't have it, there's no reason to sit there and continue your conversation, right?
Depends how desperate you are for a trade, I guess.
Depends how desperate you are. You'll start making excuses.
That's good.
Right.
I want to go to some other listener questions, but I want to get you a chance to talk about the Trader Summit coming up. So I brought the page up here. For those of you who might not know, if you go to tradersarmy.com/Trader Summit, these guys did one a couple months ago. They're doing another one here. I think is it this week?
It's Thursday, this Thursday, a few days away.
All right. So what can they expect and how do they sign up?
Yeah, I'll tell you what. So the summit is cool. This is going to be the second one we did. The first one we did because everybody was locked in their house for COVID and quarantine. We thought, what a great thing to be able to bring to people. It's free, number one, so it doesn't cost a thing. It's a no sales pitch type event. So it's just all informational and all actionable things that we can all start utilizing. And this one coming up this Thursday, I've got a section that I'm doing. Chuck Fulkerson is going to be starting out our day trading around the open, focused on futures. Justin Krebs is going to be doing a session with us. We've got a gentleman by the name of Al Davidson, who has actually, I want to say maybe he's the CEO or founder maybe of a company called Pro Trader Tax, and they focus a lot on taxation and setting up entities and businesses around your trading. And so he's going to have, because we get a lot of questions about that. When people start to become so successful in their trading, they're like, how do I pay less taxes? How do I protect myself? And I'm not a specialist in that area. Neither is Chuck or Justin, really. And so what we did is we reached out, and Al is out. He's ecstatic about coming. And he trades full-time as well. So CPA and full-time trader. He's combined the two, Pro Trader Tax. He's going to be talking with us. And then Patrick Zielbauer, who is who works at Infinity Futures, who has been touted as one of the most stable platforms in some of the most volatile markets. And I don't know about you, Merlin, but I'm on Think or Swim, and I know things can get, when things get really volatile, especially a couple months back, the market would open up and it'd be down, 1,000 points, and it was almost like the platform was stalling a little bit. It was lagging.
Yep.
It was lagging. I hear people talk about that with TradeStation all the time. And so apparently Infinity Futures has has a platform that held up incredibly, insanely solid during those period of times. They give great margin rates. So Patrick's going to come in and talk about technology, meaning trading platforms, especially around futures, and how you want to make sure that you're locked, ready to go during even high volatility periods of time, so you don't kind of hurt your trading doesn't suffer during those periods of time. So that's Patrick from Infinity Futures. And then Ryan Watkins is actually doing a section with us as well.
Nice.
A lot of you, if not most of you, probably know Ryan Watkins. He's going to be starting his own kind of educational path as well. And so we're going to give him some time to really talk about what it is that he's up to, but he's going to be bringing some great content as well. So it's all day. We'll do a little lunch break. We'll do an end of day Q&A roundtable. We're going to have, probably, I'm sure some of the guys will grab a cocktail and just do a kind of a open office hours at the end of the day. But it's all day. It goes from, I believe it's 8 in the morning. You have it in front of you, Merlin. I can't see the screen, but I believe it goes from 8 in the morning Central. So that's 6 in the morning where I live. And then that goes all the way to 3:30 in the afternoon Central. So it's all day. Yep. And it's going to be packed with lots of great content. Last one was amazing, so we're looking forward to this one as well.
Nice. Yeah, it says all the way to 3:15. So cool. Again, you guys just go to, if you want to sign up for that one, it's free, tradersarmy.com/Trader Summit. I will probably be in there as well. It's funny, there's all kinds of things happening this week I'm looking to be a part of, so it should be nice. Rudy says, is it recorded to view later?
Yes, it is going to be recorded. The last one's recorded. You can go on there right now and watch that one. It's under free trading videos. And this one will be recorded as well.
Awesome.
Because not everybody can make it all day.
It's understandable. We don't all have the trader's life.
That's right.
People
are getting back to work, so what are you going to do?
No, it's funny because normally we had a period back a few days, or maybe a couple weeks ago, before we all came out of COVID, and we had like over 200 live viewers, which is like, wow, all right, we're getting there. And now everyone's going back to work, it's all of a sudden I feel like depressed. I'm like, God, they're all leaving me. But then later on, the views start to spike as people watch it after work. Yeah. Brendan asked this one, and it's initially I was like, oh, I don't want to ask that one, but it's asking about specific strategies. He says, how do you make your income? And then it says, in terms of trading strategies. So is there would you say there's a strategy that you more lean on, or that you would, if you had a bulk of your time it's spent in that specific strategy?
I don't have a specific, it's a great question, but I don't have a specific strategy. I used to, and I was a victim of this as well, but I've been doing this now for about 15 years, and at first, like most people, we kind of suck at picking direction. We're not that great at it. We don't know turning points. We're just figuring out momentum, breakout trades. And I wasn't that great at it at first. And so I discovered at the time, and it's still a strategy that I use today, but I discovered credit spreads. And what that allows me to do is sell out of the money options for consistent premium, consistent income. And that was great, as long as the market didn't get too volatile. Well, the first time it kicked me in the ass was 2011, when the market dropped. Gosh, I want to say it was about first time it really bit me, because I wasn't doing this. Actually, no, the first time it bit me was because I started in 2005. It had to have been 2008 was the first time it bit me, when things really started collapsing. And I was using a lot of iron condors at the time, which are credit spreads on both sides of the price, put spreads and call spreads. And it bit me for the first time in 2008, but not that bad. And then I quickly recognized that, hey, this whole thing's fallen apart. And I didn't use credit spreads the rest of the year. But then in 2011, it bit me again when we had about an 18% decline in such a short period of time. Literally, I was using iron condors and credit spreads, and things were great. And I had 5 trades in one day, credit spreads, all go against me. Now, each one of those trades, the way that I was building them then, was risking 3 to 5 times what I stood to make. So 3 to 5 times, 3 to 5 times, 3 to 5 times in 5 different trades. It cost me months worth of profits in one day. Yeah. And it forced me to look at that and go, man, this strategy really, really works until it doesn't. And I got to figure out another way, because you can't go months and months and months making money, paying your bills, and then all of a sudden your last 6 months is wiped out. Not only can you not pay your bills this month, but your last 6 months was a waste as well. So that caused me to dive even deeper into more different types of strategies that I could use. And what I've found is it's very unhealthy to be married to one type of strategy, because, you know, whether it's directional or non-directional, and I use both directional spread trading and non-directional spread trading. But like I said in the beginning, it all goes back to what that chart is telling me. If the chart tells me now's the time to be directionally biased, that's what we do.
Yeah.
If the chart tells me the market's going nowhere, like it's been in gold for the last 7 weeks, then we sell iron condors on gold. Then it's going to be range bound until it's not, right? And so having a healthy mix of tools in your toolbox is how the best general contractors make money. And that's what we need to be thinking about as option traders, is having multiple tools in our toolbox for every market environment.
I agree. I think there's a challenge there, and that challenge is complexity. There's a question that came through from Alan, which I put in my nice question format since I had some time on that last segment. And yes. Alan says, any suggestions for beginners on how to digest all the information with options? My head is spinning after over a month. And I think that goes back to your point. I mean, I'm not sure exactly your origins and how you got into it, but you know, when I think stocks, I'm going to buy it or I'm going to sell it or short it, right? I mean, it's really simple. It's almost binary. When you're looking at options, it's like, okay, am I going to buy a call? Am I going to sell a call? Am I going to buy a put? Am I going to sell a put? Am I going to do combinations of those where I'm buying one, selling? I mean, there's a complexity to it that I feel people like Alan and many others who start off are just, you know, they give up because there's just so much to do. How would you suggest or recommend that someone approach it so they don't get the dizzying head spins?
Yeah, well, yeah, I'm not going to sit here and tout, you know, my options curriculum over at Traders Army for more than 8 seconds, but we created a specific program that is designed to keep it simple. That's the number one reason why most people are confused, stay confused, is they haven't found somebody to help them learn it in a simple way. And I think that's probably starts with, I think it was Einstein who is credited for saying, if you can't explain something simply enough, then you simply don't understand it well enough.
Like that.
And so I could spin your head, Merlin, you could spin their heads all day long with jargon and terminology and trading tactics and indicators, and you could spin people if you wanted to, right? Mm-hmm. And I think that a lot of times, there are people who want to spin your head. Why? Because they want you to keep coming back, and they want you to keep coming back, and they want you to keep coming back, and they want you to buy more, and they want you to enroll in more, and they want you to spend more. Oh, you'll learn options eventually, but you need this class, or you need this mentorship, or you need this book. Mm-hmm. And that's wrong, right? I think if I can help someone learn options even better than me, and I could help them start their own options education, you know, program to help people simply understand options, then I would be all about that, because this is a complex subject. It can be complex. People make it complicated. People can also make it less complicated. And so I think when you break it down into what's important, right? So there are certain strategies you will never use in options. Never. There's no point. Let's not learn those. Let's not spend time on those. And then there are a handful of trades that you will use 80, 90, 100, almost 100% of the time. Let's spend time intimately getting to know those, intimately understand the Greeks and implied volatility. And another thing that I heavily focus on is understanding the options risk profiles. So these are going to be your risk graphs, which a lot of software platforms will plot your option risk graph so you can understand risk reward probability and all that. But I always teach and I always encourage hand drawing, really getting to know the subject of options. And when you do a lot of the calculations and you do it a lot by hand at first, at least in a training environment, everything starts to come together and make sense when you're doing it, right? Yep. And I think that's the case for learning anything. Show me, forget it. Yep. You know, I can watch you do it, and I'm still not gonna be able to do it. But if you involve me and get my hands dirty, I'm going to learn it faster than not. And that's just the way it has to be taught.
Yeah.
So if you haven't been taught that way, then I don't know. I mean, your teacher could be going about it a different way.
Well, and you're right. I think there's a hand-in-hand quote. I don't remember who said this one, but you're right. There are several organizations that I know of that will just it's a constant. Well, if you take the next class, you'll get it, and then we'll teach it in the next class, and it's just this never-ending cycle. Part of it also is there are a lot of, I'm going to say, charlatans in the industry, people who give the illusion of how great they are. And there's a phrase that I love, which is, if you can't dazzle them with brilliance, you baffle them with bullshit. And I think that's what many are doing, is they're trying to make you go, I just don't get it. And the guy's going to go, or gal's going to go, oh, you will. It just takes time. By the way, give me another $1,000 for the next class. And I think one of the important things about education in the option space, or just education in any asset class, is really, let's just say education in anything, really, is if you take down the subject matter, whether it's engineering, molecular biology, or how to run a presidential campaign, you run through the list of what are the most important things. Like, what if I had a pie chart of this subject is going to take 75% understanding in this one? Well, that's what I'm going to put most of my education on. And you're right, there are some options strategies that people will never use. So you don't even mention the name, because it'll be in your head like you got to learn it, or that's a secret piece. It's not. It's just one element to it.
Yeah. Yeah.
So people saying I need a shirt with that. I'll lose track of conversations sometimes. All right, Corey. Well, I want to thank you. I appreciate you coming on again. Hopefully, it's funny because I got Justin Krebs called me the other day, and I think I'm gonna have Justin on the program on I think next Wednesday. He's gonna be on. So we got a couple of you guys on the program. It's gonna be great.
I love it. That's awesome.
All right, Corey, thank you so much for coming on today. I appreciate sharing your information about the top 3 things with options, and I'm sure I'll be talking to you soon about many things above and beyond trading, maybe even some music out there. Have you ever heard of a band called The Who? H-U?
H-U?
H-U.
No.
I tell you what, guys, if you want to...
H-U, buddy.
H-U. H-U, pal. It's funny. I know, totally digressing and going off a side tangent here, but I was listening to Amazon. Don't listen to me, Alexa. She always turns on in the middle of nothing. And this song came on. I go, this is really... It's called... The band is H-U, and the song is called Y-U-V-E. Yuve. And it's Mongolian throat singers, but it's a heavy metal band. It's dope. You gotta check it out. Being a musician, I think you can watch that video and be like, whoa, it's all these Mongolian guys just rocking out with crazy instruments. And anyway, that's your lesson for the day.
I just tried to search for it on Spotify. They're not on Spotify yet. I gotta go to YouTube, apparently.
I'll send you the link. All right, Corey, thank you so much. I appreciate all the time and effort. Have a great Trader Summit if I'm not in there, and who knows, maybe we'll see you in a Trader Summit here in the near future.
Boom. We'll see you soon. Thanks for having me, bro.
Take care.
Right. Be good.
See you. All right, guys. There we go. That was Corey Lane of Traders Army. As I mentioned earlier, you can go to tradersarmy.com/Trader Summit. I have had the opportunity and privilege of working with Chuck Fulkerson, Corey Lane, Justin Krebs, Ryan Watkins. The other two I don't know, but it sounds like you guys know these guys, Patrick Zilbauer and Al Davidson. It's a free thing, so I encourage you to check that out. Chuck and Corey have done some great things over there at Traders Army, so if you're interested, go to tradersarmy.com and check that one out. I want to kind of finish by looking at this piece right here, which is kind of summarizing... Oop, what happened to my page? Just decided to blip out. There you go. I'm not sure why that decided to... Let's do this. Let me come back to me, and then maybe my computer won't wig out. Okay, let's try this. So those 3 most important things to know about options trading. Obviously, there's a lot more to learn, right? It's... Bald Head Bees. His first comment is The Who. Chinese band knockoff of The Who? No. It's they're Mongolian. It's pretty cool, man. You should check out they're really a very interesting sound with The Who. They just popped up at random. It's H-U, by the way. Check that. It's called Yuve Ya. Very cool. Anyway, 3 most important things to know about Corey's trading options. This is just kind of, I put this together as we were talking about it, just so we could kind of summarize and have a close piece here. Number 1 on that list was pretty simple, right? It was basically saying, I want to make sure that I understand implied volatility, which would be kind of the risk meter to us if we are getting that option space and making sure we understand we're not taking out too much risk or if something's overpriced or underpriced at any moment in time. To me, that's critical. Number 2 on that list was master the underlier. I think it's interesting that people believe that they can trade options just by trading options and never understand the underlier. Corey did a great piece right there, which is saying, listen, master the underlier and then take options. So to me, if you understand the supply and demand, whether it's futures or options, etc., and you master that and you can show that you're making money with options, which, Brendan, I love your comment here. If you are doing well trading equities, then you should be able to, if you're directionally right with equities, then take options and just use that leverage and further empower those equity trades to do even better. So you should be getting better rates of return. Just go with the same basic direction you're going with the underlier. Number 3 on that list of the 3 most important things to know about trading options was get to know the Greeks. Now, this doesn't mean we all have to sing Zorba the Greek and smash a bunch of plates during wedding ceremonies or anything like that, although that is kind of fun. But there are Greek variables. There are mathematical calculations within the options world that are critical to helping you understand the risks that are in front of you and also the potential rewards that are in front of you. So for those that trade stocks or futures or Forex, you know there's always odds enhancers, analysis pieces we're doing to make sure that we're not putting ourselves in harm's way with a specific trade. The Greeks are great at that. It is actually something that you don't get in the other asset classes. So it's an odds enhancer to be sure. It's a great tool to help use to put these odds in your favor even further. All right, I'm going to leave it there. That was the end of that one. I wanted to make sure, just so I could do a little bit of a wrap-up. There was one question that came through earlier that was asking, do I do options on Forex? The answer is no. I have an options account on futures, but I still haven't done it. I just don't see the point. I get plenty of leverage, and once you start doing a derivative of a derivative, it starts to get a little bit confusing to me. And to be honest, I don't know anybody personally who's doing options on Forex. Options on the futures maybe, right? Forex futures, but not the spot market. And I believe it's because generally the people who are writing those options are the brokerage firms that are trading you the currency. To me, that's just reeks of conflict of interest and manipulation, so I've shied away from it. Yes, the Greeks he's focusing on, Delta, Vega, and Theta are the ones that Corey was talking about. All right, let me go to what's going to be happening out there tomorrow. If you guys have any last-minute questions, feel free to send those on in. You had for tomorrow, this is the 23rd. You'll notice here there's a lot of manufacturing and service stuff coming out for the EU at the top. You see the Euro, you got flash manufacturing and services PMI. It's also for, I believe, for France and Germany to come out before this, so they'll have a little bit of a heads up as they go into that 1 a.m. announcement. British pound also has flash services and manufacturing. We do too. The interesting thing to note here is that it's 15 minutes into the market open, you're going to get manufacturing and service PMI numbers. These numbers are expected to be way better than they were. Again, if we underperform the expectations, we could see some sell-off. If we overperform, you could see it start to rip. So be careful on that one. 15 minutes after that, you have new home sales and Richmond Manufacturing Index. So within the opening 30 minutes of the equity markets tomorrow, you have 3 or 4 pretty big announcements I would be very careful on as that market opens up. Probably the more important thing, which we'll talk about tomorrow, which is the rate statement from New Zealand. Right now, they're expecting it to stay at 25 basis points. Of course, that will not happen by the time we do the show. It's going to be tomorrow night at 7 p.m., so we'll probably talk about that on tomorrow's show as well. All right. That will probably do it. Let's see if I got any other last-minute comments. Baldhead B says, did you get in on BMY and Netflix? No. And the reason for that was simple, right? I wanted to wait for Netflix to confirm. So let me bring up Netflix here real quick. It's funny because I actually looked at it thinking, I'm gonna go for it anyway. We drew these lines on here, and if you recall from yesterday, I said you could go right on the open, but I wanted to wait for it to confirm, and that would basically be once it starts to drop below 451. As you can see here, it did not do that, so that was a non-trade for me on that one. BMY, I did not either, and the reason being is take a look at this line, 56.83. It took a long time for it to get above it, and I was just too busy at the time. So let me show you the 5-minute here. You'll notice that it took about 2.5 hours into the market before it finally broke above it. But it did do what I thought it would do or wanted it to do. I think you guys can all see that, right? The rule was you got to wait for it to break above this line. And it opened up below it. It ripped above it. So had I made this trade, I was in the middle of building some content. 9:30 in the morning, that would have been an entry point, and it turned out to be, you pulled 60, 70 points out of that one. But no, neither of those trades were taken by me. I generally, if Bristol Myers had done that earlier in the morning, I would have taken that trade, but I was busy at that time, so I didn't set a set and forget order. But great question, Baldhead. There you go. For tomorrow, there was a question that came through at TraderMerlin.com, which is asking me what am I looking for tomorrow. All right, I'll just show you, just so you guys have an idea of what I'm interested in. Not that these are going to be trades specifically, but you'll see a pattern here in a lot of the stuff I look at. I like CERN. CERN actually not only does it have a bearish Harami formation, but it's also came up in a supply yesterday. So that's a nice one. I'd be waiting for it to break down below that 71 mark. That's the bearish Harami formation. C.H. Robinson was probably the one I like the most out of the list. I have about 8 different things I was looking at. CHRW. I'm not going to read them all. I'm just going to give you a couple. I really like the C.H. Robinson for a couple reasons. Number one, it came right back down to this area of demand today, where you can see it had an aggressive rip out and a gap up to 80. Today you have a hammer formation forming at 77.04. So I would take this line, draw it on a snap, and I would put it right across at the high for today, which can be 77.31. Just like Bristol Myers, if we get an open below 77.04 and then it rips above at some point 77.31, I like this as a potential long, especially because yesterday had such high volume. So there you go. Those are 2 that I'm looking at. Nice. Awesome, Baldhead. Glad. Awesome. Good for you. Joseph says, did you make a show guest calendar yet? Take a peek at that. I am really excited. Guys, I do not have anybody else working for me, so this is all me. But I decided to put this up, and I'm going to try to fill out the guest schedule a little bit more frequently here. I know I don't do it as much as I should be doing it, but here is the webpage, which I know is pretty basic. But if you notice at the top at TraderMerlin.com, there's actually a guest schedule. So if you click the guest schedule, it will tell you the upcoming, at least the ones I have scheduled for so far. The remainder of this week, guys, we're going to have Bill Addis tomorrow. We're going to have Sam Evans on Wednesday. Tilly Allison will be on Thursday. And then next week we have Justin Krebs, and I'll probably have some more on next week. So hopefully you guys will join me for some of those shows. If you did not get a chance, we do the show live Monday through Friday with these great guests, but Tilly Allison did a great job yesterday. Actually came down to one of her demand zones and bounced right off it today. If you get a chance, go to Trader Merlin's YouTube page. You'll notice there's a page. Let me see if I can. This is going to be kind of weird. I'm looping. I wonder if I can do this. If they even let me. Because all of a sudden now it's like copyright infringement because you're showing their thing. If you go to... See, there's a cool loop. I can actually see the show that we're talking about, that we're doing right now. That's always entertaining. If you go to Trader Merlin's YouTube page, you go there, and he's got 90 videos, but Tilly's Market Outlook is right here, right on the front page. That one's really good. I also do the Chart of the Week. If you ever want to see the archive list, there's 2 playlists in here. You can't actually see those. These are my private ones, music, Trader Merlin, and workout stuff. But Chart of the Week, there's Tilly's Market Outlook, and those will all be updated regularly. So for anybody who might be missing those and didn't get a chance to see the Tilly piece, go ahead and do it. We'll talk with her on Thursday about some market levels. Oh, sorry, I'm not even showing you guys. I guess I should probably have shown you. There you go. Yeah, this is these are the most recent videos. If you click on playlist, you'll see group by category. So I have a Chart of the Week playlist. I have Tilly's Market Outlook playlist, and then the regular show. So all of that is done to hopefully help you guys out and get some more information about the markets. All right, everybody, that will do it for today's show. Thank you guys so much. Hopefully you guys enjoyed. Corey, if you did, do me a favor, click that thumbs up button. Of course, you can always subscribe to the channel if you are new. I know we have some new people joining us today, so thank you for joining us. Hopefully we'll see you guys tomorrow with Bill Addis. We're going to talk about bonds, interest rates, the Fed, and maybe talk about the Chart of the Week that I did on Saturday, which talks about the possibility of negative interest rates. It seems to be becoming more and more likely. We will have to wait and see. No, Dave, I'm not doing a Brazilian butt lift video, although I do have a tiny little posterior. Not going down that path. That will do it for today, everybody. Thank you guys so much. Have a fantastic day. I will see you tomorrow with Bill Addis.